I hope you're having an amazing day. My name is Colin. I'm here together today with Rick, Launchpad School, talking about a very interesting topic today, specifically emission on projects. So again, we go back to Divestic. So I had a conversation this week with one of the founders from Spectre VC, which we're aligning for strategic partnership. Quite interesting talking about, the Track Digits software, the tools, the functionalities, whatever it can do, and some noteworthy levels of investors, right? These guys, they invest, 50, 100K per project as a VC. So they definitely have interesting insights. And one thing is in regards to circulating supply and emissions. So basically new supply being vested and then added to the circulating supply, what that does and how you can basically look at things. Quite interesting. One example would be, let's say you stake per month, right? You stake your token. You get a 10% APY, or let's say the APY is of a certain percentage that is 10% per month. So let's say the APY non-compounded would be 120% APR. So 10% per month non-compounded. So you stake 100 tokens. At the end of the month, how many do you have with a 10% gain? Basic math. 10%.
Oh, wait, I have to do the math. I have to do math.
Yeah. We're doing this together.
So that's what is it, 10% over a month?
Over 100
tokens. Oh boy. My pen. So that's 10. No, just kidding. That's 10, so that's 60. There you go.
No, wait.
40. Wait, 40. It's 40, obviously.
No, I just want to know 10% over 100.
That's 10.
10. Okay, so at the end of the month, I don't have 100, I have 110. Because it takes 1 month.
Yeah.
Okay.
Yeah.
If this is already a struggle, can you imagine in which direction we're going in a second?
It's gonna be a really bad day.
Start of the month, 100. End of the month, 110. So you made a 10% gain. However, that is only the case if the price stays the same. So what happens is, that's an interesting debate. If you get a 10% APR, right, let's say per month in this scenario, just to keep it easy for you to understand, 10% increase in volume, price stays stable, you have gained 10%, right? Because you have 10% more tokens. However, those tokens are emission, right? The circulating supply goes up. If everybody gains 10%, then what happens is the supply increases, demand stays the same, price goes down. When the price goes down, it is likely to go down 10%, right? Which means that you didn't gain anything. You locked up your tokens, which is exposing yourself to risk, but you didn't gain anything.
Is that always the case though?
No, but it's interesting to argue. People don't understand. When they stake, they see APR, APY, and they think free money. But that free money is diluting the supply, which means if there's no demand, supply goes up, price goes down. Basic economics, what we spoke about the last 3 weeks, right? And under that model, any invitation to bribe somebody to lock up their tokens is basically you buy tokens which have no utility, because otherwise you wouldn't have to stake them, right? So the staking becomes a utility. They offer you APR, but the APR is not actually a utility. It's a tool for dilution for the project. So they're fucking you twice. That's what it comes down to. First, you buy their token with the idea of utility through passive income. Yet, if there's no utility over time, it's just continuous dilution, which means price goes down. That's the interesting part. So again, it comes down to the project to deliver utility.
Yeah.
Which is one of the major, I would say, point of interests, which you have no control over as an investor. So the team ultimately is super important. And your realistic perception of what the team can accomplish on their roadmap. You know, let me grab a project Herman shared today in the Digits Club. That was quite funny. It's a real shit project, but it's an NFT project, but I just want to use it as an example because it's like a very, very good example. It's called Lucky Buddhitis. So this is obviously all retardation when you open this by Super Buddha. So about the artist, and he goes into some kind of hippie, as a non-native Chinese artist living in Shanghai, Super Buddha began creating art in a hybrid environment of new and old. What the fuck does that even mean? This is just using like hype buzzwords, and you haven't really said anything. You said he's living in Shanghai, but not Chinese. That's all you've said, basically. Anyway, read all this crap, go to the roadmap, right? Short term, within 2 months of the mint, right? Immediately invest mint money in the development of Super Buddha play to earn game and metaverse. Buddhitis temple, all right, whatever that means. SQF creative facility. What does that mean? SQF, sales qualified funnel. I don't know what that means. Creative facility, 30,000 being made just for lucky Buddhita holders. What does that even mean? SQF creative facility. I have no idea what that is. Lucky Buddhitas holder party with celebrity patrons and friends of Super Buddha around the world.
Do they mean Patreons?
To put this on the roadmap, it's already retarded. And then stage 4, periodic ETH giveaways to golden Buddhitas holders. So you need to pay. If you're lucky to get a rare one, then you might receive, if you're lucky, some ETH periodically. How is that a utility? Of course, merch, because if you have no utility, just put merch on the roadmap, right? Just put up a shitty drop shipping store and you have merch. And then the roadmap is actually the release of the next roadmap. Okay, that one will have specifics on long-term plans. They don't have that right now. Okay, very interesting, and this is everything they have. So yeah, really bullish on this one. Not to basically scope, obviously the roadmap as one example, but even like team and everything, you can already tell if the investment is interesting, even has potential or not, you know. Let me see if I have some good examples on oh yeah, well, I can pick up what Emerson shared before. So Emerson shared DAO Maker lockup tokens, so we can actually check that, because I didn't even know that was shared today, and it was quite kind of surprised to me, but it is quite an interesting one, because you have to think continuously about the economy, not only about the gain, but also about the potential loss. So head over to the FAQ, then we head over to staking right here. And then how long do I need to stake? Okay. DAOpad users are required to stake their DAO and stay within their winning tier for the entirety of their prize tokens vesting period. So basically, that's quite unique. From what I understand, you would need to continually stake while the token is being vested. So if you are having 2 years worth of vesting, then you need to stake for 2 years. I'm not really sure, because they have obviously different rounds. This is called public shoe. There's private as well. They're referring to, so you would have to dig a little bit deeper. But this is obviously one of the metrics. If we would just take this information as is, right? So you stake the tokens, you get allocated allocation, you fill the allocation, but you cannot remove the staking during the duration of the vesting. So basically those funds are locked, which is obviously a huge pro for DAO Maker, because they lock up the supply, right? It might also be a reason why DAO Maker relative to the other launchpads hasn't significantly dropped. Sorry?
They also have longer vestings.
Well, that might have to do with it, but that's usually product specific. The Launchpad doesn't control that. The vesting periods. They could select them based on the vesting periods, but if you would look at how far it has gone down, still 6x down, right, from the all-time high. So quite significantly. However, this is an all-time chart. So from the launch, it opened on 320, it has gone below to 180, and it's around the all-time low right now of about, well, 125 was the all-time low. It has been lower, 130, 140. So it is actually super stable. Of course, with such a huge percentage of the supply being locked up, it makes sense, right? Seedify coming in at second place at the moment. That has gone down way more. From $16 to $2, still an 8x down, but in terms of numeric value, way more discrepancy. Make sense? And then if you go even into the lower market caps, it becomes more and more significant. I know for a fact that if you stake on Seedify and your period ends, let's say 60 days, you can unstake, sell your tokens, and still receive the vesting, right? On DAO Maker, they have specifically different rules, which makes sense. However, two things. From a business perspective of DAO Maker, it's very good, right? Because they lock up the tokens, they increase commitment. You're very unlikely to leave DAO Maker once you've joined it. On the other side, for investors, it's obviously extremely risky. If your tokens are being vested for 2 years, then you need to stake that specific amount for 2 years as well. Kind of strange. So I assume there are some terms and conditions to this as well. Let me see, smart contract used for staking. Okay, 5 audits. That's pretty sick. But this is like a good example of, you know, making the process more difficult, but perhaps for the greater good, because ultimately the Launchpad becomes more stable, price fluctuate less. However, your initial commitment to the Launchpad cannot be revoked, right? Because you cannot go back. It's like once you've pushed that commitment, then it has to stay there. Ultimately, on where we were talking about circulating supply, it is obviously one of the best moves, because it basically locks up all the circulating supply, which means that if there is at any moment new increased demand, the price has to shoot up, because there's no tokens, or hopefully not enough in circulation. Make sense?
Of course, yeah.
And then the question is, let's talk about GameFi, because GameFi is probably one of the hottest topics in general to invest in, specifically private public rounds. How does it make sense, or does it even make sense, and if so, in which way, that tokens are being vested if the game is not developed yet? How does that work? Because they all do it, but why?
Right. Yeah, if it makes sense, that's a difficult one, but they do it because they need the funding for the team to actually go and develop the team, the game. And usually when they do the rounds, the game is nowhere near finished. So it's either giving them a 2-year cliff or already start vesting, and basically hope that the investors understand that when the game is coming out.
They never do, because the price always goes down.
Yeah.
So why would you do that? Because
Not really
they already
through.
have raised the funds. They get the funds immediately on the sales. If they cliff them all for 1 year, then they just need to wait 1 year. But why don't they do that?
Yeah, well, good odds if people see a year cliff that they don't invest into the project.
Perhaps that could be
risk.
one argument, but it's more of like a business decision behind it.
Okay.
It's about money. Of course, it's about money.
It's always about money.
And this is something that's super interesting. Like, I'm always amazed that when I talk shit about other projects, I have tons of people on these AMAs. And when I talk like super interesting tokenomic stuff, relatively little people show up. But I will show you something. First, think about it, and then I will show you how it actually works. But it's mind-blowing, because if you understand what these projects do, they generate money out of nothing. right? Which is something that's like, interesting. How can you do this? How could one do this?
Mhm.
And basically they give them the tokens early on purpose. That's the crazy part. It's on purpose, right? But why?
Good one. I'm alone. Chat doesn't have a clue.
Chat is quiet. Everybody's anticipating your next move. What is he gonna
Pushing
say?
me
What,
front.
what
Yeah,
is
yeah.
he gonna do?
It's a
So
crazy one. Thinking about it.
if the tokens are being vested to the investors, we're talking specifically about public sale users because it's their behavior why they usually give them high TGE amounts. And it's solely at the discretion of the investor, the actions that they take, right? What if you get the tokens, what can you do? Two things.
Sell. Hold.
Yep, sell or hold. If the price goes down, what is it? What is happening?
Either the supply is well, you know, either the supply stays the same and the demand goes lower. Am I saying that correctly? Supply stays the same,
Yes.
demand goes lower, then the price decreases as well. Yeah, I think I got that right.
Okay, definitely not what I was looking for, but if the yeah, but it makes sense because in that case, okay, so if the value of the token goes down, the more people sell, the whole valuation of the project goes down, right? That's what you have to think about. So again, this is not specifically, let me grab my sketchpad. I can sketch it for you.
Interesting.
Because again, it's basic math and business, but people don't understand how these things work because they only look, and that's one of the big problems with public round investors. What's in it for me? What's in it for me? What's in it for me? They don't scope a little bit broader to see what are the interests of the other parties involved, because you're not in it alone, right? And
Right.
because they have such a narrow focus, they always fuck up. Okay, so this is the market, and this is you, right, with your tokens. So if this is a DEX, right, if we talk about IDO, initial DEX offering, then this must be a liquidity pool, right? So the liquidity pool is half X token and half ETH, right? Because you need to, if you don't know how a liquidity pool works, then you're a little fucked, but this is how it works. So half is one currency, half is the other. Then if you are a DEX user, you could basically sell X currency and then get ETH back, right? Which means in this case, now we have less ETH and more X currency. So arbitrage companies can make money trading this on other exchanges, and then they make some money, right? So the goal is to keep this in balance. If this is not in balance and arbitrage takes place, either it's very likely that if people keep selling and the arbitrage takes place, that this price goes down, right, of the X, because the price relative of the ETH goes up, because more people want to buy ETH and more people want to sell X. Make sense? There's like a third party here. Don't get confused. Just
No, I
so
can see
for the
the arrow.
logic,
Very
so
clear.
make it so it makes sense. So this is the IDO investor right here. So they keep selling. They get ETH. They sell X. Basically, price goes down. Price of ETH goes up. Supply and demand basics right here. But what happens is if we clean this overview, so go all the way back, clean it. Now you understand this aspect. If you remember on the tokenomics, there's always liquidity, which means that the project fills 500K, random amount, and 500K worth of ETH and 500K worth of X. 1 second. Herman is texting me.
Very important stuff.
Yeah, not. It's about Spectre. 500K of ETH and 500K of X, right? Because it has to be in balance. This is before the pool opens. So as soon as the pool opens, people can either sell X or and buy ETH, right? Or the other way around, push in more ETH to buy X, right? But we assume these guys are dumpers. There's no utility. They receive their tokens, 50% TGE or whatever. What do? They dump, right? Because they can only stake or dump, and it's a bear market, so you dump. So what happens is they slowly drive the value of the token down, right? Now, let's say that the strategic round is cliffed for 6 months. Yes. So this process, rinse, repeat, sell, 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 because this is, let's say, 50% TGE plus 25 plus 25. So in 4 months, these guys are out. They've sold all their tokens. They've pushed the price down. It is very likely that after 6 months, when these tokens are unlocked, their relative purchase price, the price has gone down, right? But there's no demand anyway, still. So when the demand comes, let's sketch a graph, right? The price started here, the price fell. When the demand finally comes on this moment, the entry price for the users that now want to buy because there is utility, actual utility, is 50% less. And that 50% is basically the loss of this IDO group because they sold back into the liquidity pool. Then when the actual utility gets delivered and seed here, or maybe pre-seed here team gets vested, they don't have, let's say, a 1x that they would have here, they have a 6x. But they need to get rid of all this oversupply. And what happens is that they push liquidity here, and then the IDO's investors, they have the choice. Nobody's forcing them to sell. But because they're paper hands and they have paper hand behavior, they sell back into the liquidity pool, which basically means that all these tokens go into the liquidity pool. And if the project would do a buyback, which is very smart, let's say the TGE is 10 cents, they push the price back to 2 cents, the company does a buyback, they buy back with the funds of the raise. So they buy back for 5 times cheaper. They make a 500% return on their money by just buying back those tokens. Then they haven't even sold them yet. It's unrealized gains. But let's say it pumps beyond the original TGE price, the gains are tremendous. And this is basically transferring money from the impatient to the patient. That's what it is. But that's why that utility is so important. And the question is, why would they vest tokens if there's no utility? Because there are people that are so impatient that will sell them back into the liquidity pool, which basically pushes the price down temporarily, but they don't mind.
Right.
And why don't they mind? Because
tokens.
For the earlier investors, it's beneficial. For the founders, it's beneficial. But one of the main important things is ultimately the market cap going down, the price going down is never a good thing. If they could choose not going down or going down, they would choose not going down. But in a bear market, specifically crypto right now, the average project is down 96%, average project. In 2017, this was 99.999%. That means that only 1 out of 1,000 projects survived the bear market. All of the other ones went bankrupt, all of these companies, because they couldn't last 2 years with the funds they raised. Interesting fact now is that, of course, they would choose not for the price to drop, for the market cap, a better reputation. But 96% down only 6 months into the bear, kind of inevitable for most games specifically. It's more ecosystems that are already up and running that are maybe down 30%, you know? So if the choice is that you're going to go down inevitably, right? Get the non-supporters, the paper hands, out quick. And for crypto, 6 months bear market is nothing, right? It sounds long. If you go through it, it's long. But for a business, it's not that long. So if they purposely themselves want to take the loss, let them take the loss. They accumulate the loss, and then for people that truly believe in the project, when the utility comes, they can enter lower, which is always better.
Right. Yeah.
And perhaps these people have a better future as well. Obviously, there's a whole different tokenized business around it, right? So IDO users, I'm just generalizing everything right now. IDO users selling back into the liquidity pool also has a tremendous amount of problems. So for the project, it's never easy. That's why they say launching a token for a project, you better think twice about doing that. It's never as easy as it looks unless you're launching like a meme coin retard project that you're going to rug in 6 months. Otherwise, it's quite complex. It does sound complex, no?
Yeah, no, it sounds complex. And I think I actually have a question on this as well. So why do you feel like it's always the public people, right, the investors that participated in the public round that are the paper hands that immediately throw away their tokens? Because you participated in public rounds as well.
Yes.
And did you sell the tokens right away?
Sometimes, but I did participate in most of the launches when there was no bear market. So the market was bullish, and then the terms are very different, right?
Okay.
So
yeah.
when you look at these type of things, what's very important to note is obviously market conditions, right? So in a bull market, any round, any project will do really well, right? In a more bearish trend, where you came in basically, right, where the bearish trend already set in quite significantly, in that case, it's a lot more about choices, analysis, research, all these things, right? What is interesting is what you have to think about is if you look at seed, strategic, private, public as base rounds, the deeper you go, the higher the risk and the lower the price, but also the higher the requirements for the individual. So for you to get access to a seed round without me, impossible. But
right.
why is it possible for me? Because I have a lot of connections, right? I have, proof of concept. I have reputation. So for me, it's not a problem to get into strategic round with the reputation that I have. So I need to ask some people to get into seed, right? I still need to ask for it. For you would be lucky if you could get into a launchpad with a private round.
Right.
Because even the public rounds require staking, right? And private rounds, not all the launchpads have private rounds. And no launchpads will offer strategic rounds, except if you're KOL. So you have audience that they can market to, then they might offer you strategic rounds. So keep in mind that most of the paper hands are in public, also because the requirements are very little.
Are lower, right.
If the requirements were lower somewhere else, you're dealing with more serious audience because you have more requirements, then it might shift. And that's why these people also need to pay the highest price. They get the tokens fast, just because the requirements are lower. And they take less significant risk. But if you think about it, in a bull market, you ideally want 100% TG because everything is going to blow up, right? But still, the vesting is usually quite the same. 25%, 20% on a public round is quite normal. So it's very unlikely that during the bullish trend, you would get all your tokens, but the tokens do really well. Think about it. That's just thinking about returns. If you think about longevity of the project, I believe there is no reason why any round would have less than 10 months, 12 months vesting for any round, even a public round, because it is extremely unlikely that there will be so much demand for the token. Look, for example, at ApeCoin. They did a huge airdrop, right? So they gave all the tokens for free. Price went like parabolic because these tokens were gifted for free. There was a lot of demand because, they're going to release a token. What is this used for? And then they had no utility for the next 6 months and the price went down. They did that obviously for a specific reason, because the people that bought in are not the right audience. Those are the hype people, right? And I believe if you would do a public round, it's quite difficult because for the project, are you a real investor if you're buying tokens just for the money purpose? I mean, the money is the business model of investing, right? You invest to make money. But if you invest just to dump the tokens as soon as you can, Or are you going to exit on the highest point where you feel that the company has achieved the maximum it can achieve, like you would with actual shares in a company? You exit out of your shares position if you feel like the company has reached a point on where you are being rewarded for your risk with the money, and they cannot grow much further, or you have other interests. But we call it investing because you're investing money, but most of these guys are just gambling. They put in money. As soon as they get the tokens, they sell. If I'm the quickest to sell, then I have the highest yield. So is it more like a sport? You need to be fast, because if you're not fast, then you lose money. So it has nothing to do with investing. And that's why I feel like the whole public round concept is being hit so hard by the bear market, because there is nothing there except hype. And the whole why are seed and strategic rounds still being filled with no problems? Yes, maybe it's become a little bit more complex to raise funds, but I get messages all the time of seed investment, strategic rounds being filled. People are still fighting for allocation in seed rounds, right? Yet public rounds are not being filled. That's a signal, because seed is usually at least, 1 to 4 million, usually, right? Strategic, maybe less. Private maybe higher, but public rounds, you see like 100K public rounds that are not being filled. It's the mindset of the investor, because a seed investor knows that they need to wait 2-3 years for their tokens.
Wow, so it's like this whole, if you think about it, it's a filtration what these companies do, right? So that is the graph that we see every single time, where everything drops right away, and then it has these little bumps going up again. That's basically the company on purpose saying, let's get rid of those, get rid of those guys, and wait for the real people. Sure, it's oversimplification, but
yeah, I would say like so I think it's not, they don't decide to push the graph down. The graph moves down because the market is bearish and people are selling because they are fearful, right? The company could do something to stop it, but they don't, which is still, that's basically the side of the company. So the user takes an action and the company cannot stop it, but they could hype them, marketing something, but they don't, because it's not the right user, it's not the right time. And that's what you see with these companies doing marketing events right now. Market is bearish, up, down, up. They can't sustain it. If you look at a company like Unix, like FN, they went down, right, significantly, but now they're extremely stable because the people that wanted to leave left.
Right.
And now maybe they go still down 0.5% per week, because that's the global market trend, right? But there's some of these companies that, like Magicraft is a good example, plus 40%, minus 30%, minus 100%, plus 40%, and this is month to month, so not day to day. But it's hype announcements. So what is their announcement? Oh, we have new NFTs. There's a game beta. That's good things, but you can also release a game beta like Cryo War without including the token in your marketing. Because Cryo War has one of the best betas I've seen. The alpha was perfect. The beta is great. I have a key myself. I can play. They do all the big conferences. They did Gamescom and everything. Yet they don't talk about the token price. So the token price barely moves. Magicraft founders, they tweet all day about the token price. Token is up 60%, blah, 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 blah. And what I think is they're pumping the price to dump their own tokens, the team tokens, which is, of course, because they're all KOLs, it kind of makes sense. But I just don't understand as a founder, because I'm a founder myself, right, looking into a token, I believe that the price of the token is important, yes, as a more ethical validation of the work you're performing, because you have a market cap, so there's a valuation of the company in terms of the token, right, which is important. Yet it doesn't mean anything for you as a founder, because you've already raised the money. So whether the price of the token is $1 or $10, I don't give a fuck. I don't give a fuck about the floor price. It is that I have NFTs myself, so there's a personal direct interest. If I don't have any NFTs myself, the reason that I care about the floor price is because it resembles the value of our ecosystem in the market. Yet if the floor one day goes to 0.01, I don't give a fuck if the next day it goes back to 1 ETH. It is what it is, you know. But to talk about continuously the floor is, are you with our product for the product, or are you with our product for the appreciation in value? That's two different things. Make sense?
Yeah, it does make sense. Let's see, Masiamo says,
that's a good one. They want to pump the token before it dumps completely, right? That is the biggest problem, because what if this bear lasts another 6 months? It's inevitable that they cannot maintain that hype, and because of the bumps that they do, it will only crash harder because you're creating false expectations. Effin has been silent. They did the body raise, and now they're doing another promo for the land sale, purposeful executing big milestones on their roadmap. Other than that, they are silent. What are they doing? They're building, and the market is what the market is. And I think, like, we know, like, oh, we want updates. What the fuck do you want to hear? You know, like, as you know, we have this huge thing with Track Digits. It's a huge expansion. Internally, we call it ecosystem 2.0, right? It's like a huge level. But for me to explain it to users right now, it has no value, because ecosystem 1 is not even live yet, right? And the same thing with Effin. Of course, I talk with these projects. I ask them, what are you doing? Like with Unix, the things that people know about Unix and what it's going to become, which is all completed, it's all developed, it's all ready. You know, the people are in position, they're just waiting for the market. It's insane, right? It's absolutely insane. And then there's some of these other projects that are doing great things, but the users are impatient. That is the thing. If you're looking at like macroeconomic trends, like the US elections, for example, you can fight it all you want, but government can just change interest rates and they just manipulate the economy. And it's not conspiracy shit, right? It's more about, if you know after the midterms they're going to push the market into a recession, why would you do crazy marketing right now? Because you against the market, you'll lose. And can you then not better focus on fucking building shit? The same thing, you know, you had this great idea of this roundtable. I loved it. Herman loved it. Let's try it. You know, the thing is, people are just occupied with other shit. They just like they want to do other stuff, you know. And because we do Launchpad School, the two of us cannot also do the roundtable. Otherwise, we would just do the roundtable, you and me, kind of like we're doing right now. And the thing is, the general interest in the market is down. So we could do an AMA every single day. If the market goes into a bull run, $50,000, $60,000 Bitcoin, we go live 8 o'clock in the morning, 6 o'clock at night, every single day, the two of us, for an hour at a time, because there will be 5,000 people watching. It's worth it, right? Right now, you got like 20 people. Still good. We still do it because, you know, consistency, we have something interesting to talk about, you know, but comparable to 5,000 people, and this is about viewers. Can you imagine if it's about money? Right? Fucking CEO. People say like, oh, what are the updates? What are the updates? Okay, this fucking guy takes like an hour out of his day while they're building, which nobody knows. And then he's like, okay, guys, my company is worth 400 million on the market cap, right? Fully diluted. What are you guys' questions? You guys keep shouting. When Binance, when new exchange, why is the token going down? Then you get that fucking standard retardation. So I understand why they don't do fucking AMAs if there's no updates, right?
Yeah. So you actually had that comment in the Discord the other day where you said you listed a couple of businesses that got created during the bear markets, right? Mostly, I think, indicating that when the market is down, that's when the good companies and the good teams kind of shut the hell up and start developing their projects and good things get created, right? I don't exactly know what companies you listed, but it was a bunch.
I did OpenSea, for example. I remember CryptoPunks was one of them, right? That's all Bitcoin. 2017, basically. Bitcoin was 2014 during the economic crisis, right? But those are like macro levels, of course. If we look like at our own shit in our own markets, what I think is interesting, so from what I understand, Unix Gaming, which used to be called Unix Gaming Guild, is transitioning out of the guild aspect because they see that it's not really big monetization aspect. They did the guild, it wasn't as they expected, and they adapted.
No.
But they adapted like very in a very advanced way. One second. So that opportunity is obviously quite big, but you wouldn't see that right now. So the thing is, when all the noise leaves the market, right, which is mostly the public sale users, right, the whole hype crew that bring in huge liquidity as well, when they leave the market, when the market becomes bearish, you don't have to entertain as a project all of these users, which frees up a lot of time, right? And when these resources are allocated to building, time passes quite quickly, even if you don't have to entertain them, because you have like a marketing team, they do other shit, right? Partnerships and stuff, but development teams, they still continue. So even if you don't have to entertain the audience, what people don't realize is that in a bull market, we're living in the moment. In a bearish market, everybody just looks at tomorrow, next week, next month, it's going to be better. So the days before you know it, it's crazy that we launched Digits Club officially like beginning of January, right? It's already been 8 months since we started the project. It still feels very early, and we have accomplished an extreme amount, right? Yet the time moves really fast because the market has been bearish for 8 months. It was only bullish for 2 months in the last cycle, right? The last boost, the blow off top, basically. October, November period, where the crypto gaming really went insane. That's where I came back into the crypto in September. I was like, perfect moment, unexpected.
Only 2 months out.
But that was a lot of money, as you can imagine, because basically as of September, I started documenting. And at that point in September, in August, I think in August was when I started. I did 4 hours a day, every day, of blockchain studying, how it works, what is GameFi, all this shit. And then in September, I already did 12 hours a day. So of course, in that case, you know, when the bull came and was ready, then I was real ready to push things forward. And that's important to consider when looking at these projects, right? When people say like, oh, the builders, like you said, what is actually happening, they utilize their time properly, and you're doing other shit in your daily life as like a public sale investor, yet these companies, they're still running. And that's very different. I'm not talking about NFT projects, because NFT projects, usually it's mostly 99% of them are garbage, right? They're not building anything, it's just a community, whatever. But I'm talking about like real ecosystems, real products with real utility, real companies with like more than 10 people working there full time. You know, that's like that's 400 hours a week, human labor that's being invested. For us, we're talking 800 hours a week, right? If everybody only worked 40 hours and half of our crew works more than 40 hours. So let's say we're over 1,000 hours a week working on Digits brands, right? That's insane. 4,000 hours a month that is being invested into this ecosystem in the bear market, right? So of course, we're building great things. Well, you should, because you got a fuck ton of time, right? And that's the thing which I feel like is inevitable ultimately for projects. And that's also how you pick good projects right now. It's about how well they position themselves right now, right? I liked Effin, and I like it so much more because they just shut the fuck up and get to work. If they have something to say, they have something to say. If not, not, right? If I look at other projects, like for example, Seedify, they're positioning their NFT launchpad, right? So they have continuous hype. They don't focus at all on their regular launchpad. Why not? Because it's bleeding that market. They switch their focus to the NFT launchpad. They add another revenue stream, but also something to survive the next bull and the next bear. Because in the next bull, launchpad will do amazing. Seedify launchpad, because in the number one loser in the bear is the launchpad, and the number one winner in a bull is the launchpad, right? There's two extremes. And now they're doing the NFT launchpad, which I think is extremely interesting, because although the volume is down 99% on NFTs as well, there's still a lot of positivity in that community. So why not launch the
99%?
sorry?
Seriously? Is it down 99.9%?
No,
Man.
no, 99 total, not 0.99, but
Oh, okay.
99% volume down,
Well,
transaction
still.
volume.
Oh,
Yeah,
okay.
huge.
Yeah.
But it makes sense because liquidity is being moved out of the market. So the money is
Yeah.
going somewhere else. But they're launching their NFT launchpad. They're testing it, you know. So when the bull run comes, they're ready. And that's basically when people ask me about digits, you know, like, oh, when is the ecosystem going live? You know, the only thing, what's going to happen? We launch DigitsPad, then what? There's no fucking projects. What's the difference from that product right now? The only difference is that you yield digits coins, which is inflation. Supply goes up, demand stays the same, your digits coins are worthless because there's no utility. So launching sooner because you're impatient makes no sense. For the economy, it makes no sense, right? You should only launch when there's actual utility, right? And doesn't mean that you're going to launch DigitsPad only in a bull market, right? But there should be at least something on the ecosystem. You should have whitelist spots for the marketplace. If there's no tokens on DigitsPad, then at least some NFTs that can be auctioned for digit coins. You know, subscription models, they should work. The vault, ready. You know, all these different options where I feel like that's infrastructure, right? So when you look at CeDeFi making the moves into NFTs, just as DAOmaker is, but DAOmaker has made no announcements yet. They also are going to launch NFTs. They understand that that's the next step, right, in their, you know, business model, but also livelihood, because they don't want to get screwed in the next bear as they got screwed this bear, in how much value they lost, how chaotic everything went. Because these companies are only a year old, right? Most of them, DAOmaker is a little bit older, but most of them aren't even, this is their first bear market that they experience. So now they get into issues with tokenomics and all kinds of garbage that they didn't anticipate before, which is quite interesting. So them adding these things, and well, you asked for an example, which I think is great. I think innovation stuff during a bear market, like CK rollups, like the layer 2, layer 0 crap. I researched a little bit yesterday how it works, but it's basically they build on Ethereum and side chains, etc., to make things more efficient, more effective. Those are all like super advanced things that you want to deploy and test with small user groups, fix all the bugs, because these products are not ready for scale, but you want to do that now. And then as soon as you have proof of concept, it works, because, you know, out of these services, there may be 50 of them, right? All kinds of different things that didn't make it. And then there's maybe 3 of them right now, and of which one, I forgot which one it was, it has like 85% of usage. So almost everybody uses that one, right? You can imagine that, of course, if they would launch during the bull run, it would be a fucking disaster, because all of a sudden, in 2 days, you have 250,000 users, or you had the potential and you couldn't capitalize on it because you just weren't ready. So that whole bear market is not even that big of a deal, I would say.
Yeah, it depends. And do you think that we're going to see launchpads overall kind of transition away from just being a launchpad and kind of move into being other things as well, so they're not going to get as hit as hard during a bear market? I mean, I'm seeing a lot of these finance websites popping up where they're a launchpad, but they do so many other things. Do you think that that's like a smart move for those companies to do that, just like DAOmaker is introducing an NFT marketplace and launchpads and stuff like that?
One more time, the question.
So there's a lot of finance platforms popping up that don't just do launches, but they also have other, well, let's call them utility on their website, just like how, for instance, CeDeFi and DAOmaker are now introducing a NFT launchpad, right? They're doing other things apart from just being a launchpad. Do you think that's important for the next bear market, for launchpads to not be hit as hard?
Yes, But the problem, of course, is how far you can diversify out of your core audience. So you see a lot of launchpads that have liquidity pools and shit, you know, like TrustFi, for example. It's quite broad. Some launchpads have an NFT marketplace because there's not a set node. But the thing is, you have to think it from a business perspective about the same user style, but also the same business model on the back end. So if you incubate NFT projects, it's very similar as incubating projects, but one is a token, one is the NFT. The fee is still either straight sale or tokens or NFTs. So illiquid or liquid payment, right? The structure is the same. If you have a launchpad and then a liquidity pool, the only added value for the projects is liquidity pool. You can offer them, but one is liquidity mining and the other one is incubation. It's very different. Also, the target audience, one is IDO investors, the other one is DeFi users. Very different, right? Yeah. So that already creates like a wedge that I feel where you can basically truly see the expertise of the team, that I wouldn't put those two together because business-wise, it makes no sense.
Okay.
Once you scale, you run into problems because you know, if you talk business, you talk about like very advanced things like user avatars. Who is the user? 4 digits, we have a user, you know, 25, 34-year-old male, goes all the way up till 44. You know, what's the posture like? What's the behavior like? What kind of hobbies do they have? You know, because you're looking for a specific individual that would be your dream 100 customer. There's 100 customers that you can fill like that.
Yeah.
Right. It's basic marketing analogy. However, so many people say like, oh, we have a male and a female. Impossible. It's either male or female. These genders are so different. Unless you're like HubSpot or Salesforce and you have like 1 million users, then yes, you might have a male and a female character. But less than 6% of our customers are female, which means that these females share a lot of the male avatar traits, but we shouldn't focus on them because 94% of the business we generate on males. So then we focus there. We run a business, and any business would, right? But it's super interesting that if you would ask a token project, an NFT project, you know, who's your key user? They can usually fill in the demographics, but that's where the research stops. Because they didn't do the research themselves, they hired somebody to do the research for them. You just get market information, which is interesting. But the question is, which one was it? I think it was the guys from Xborg, the gaming company from Swissborg. On an AMA, somebody asked him, but he's a gamer, the CEO. So he could tell the ideal user for Xborg perfectly. And he said, what about investors? And he could even do it for his investors. What kind of investor he would like, with which kind of background. It was really about like a complete value add. The company wins, the investor wins, the gamer wins, everybody wins. Where when I would take a project, let's say a tier 3 project that launches in Communitas or whatever, they only think about money. Just raise the money. What about the user? Who's going to play? Well, we find players, we run ads, whatever. We just want to raise the money, you know, it's not as thorough. And I think that's obviously one of the signals as well that could really make the difference in a bear market, how in-depth the research goes, ultimately. Sure. And that's why I like doing, you know, or explaining my thoughts about the Digits products. You know, this is how it works. This is interesting because it just shows that, you know, we think about, or I don't want to say it's different because it's like my marketing strategy, but it's just more advanced. You know, you're dealing with scale. You know, I've been looking at Track Digits. You know, we're talking 5, 10, 15, 20,000 users. It's not your regular NFT project, which onboards like 500 limited edition NFTs or like 999 agents, and that's it. You know, what are the metrics around it that make sense? Anyway, that's everything for today. I'm just going to stop the recording and then I'm going to show you something because I see Massimiliano joined late, so secrets. Anyway, Launchpad School, little bit of a rant today, very little screen sharing. We'll be back next week with a dedicated topic. The rant is over. Thank you so much for watching. Rick, thank you for participating, and I will see you in the next one.